You are listening to ChartingWealth.com for Thursday, the 1st of December, 2016. Market down on Wednesday. We saw that on the way, actually on Tuesday, because our Heikin Ashi candlesticks, which means average pace in Japanese, had broken our 2-day trend line. We had a red open box candle showing a shift in the sentiment in the market, even though yesterday, that was Tuesday, as we record this on Wednesday night for you, on Tuesday, we saw that the market, even though it was up, had lost its average pace. If you don't know what the Heikin Ashi candlesticks are, you need to learn about them. We've got a great training online at Charting Wealth's website. You can also find it at YouTube and at our iTunes channel. All that's available under Charting Wealth, and the website, of course, chartingwealth.com. So what do we have going on? Well, we're down 0.20% for the day. We see that the derivative oscillator had been higher the prior day. That has lost momentum for the first day in several days on our 2-day candles. So really the first 2-day candlestick in many, many days. 1, 2, 3, 4, 5, 6. So that's 12 days of movement. This is the first time that we've seen that derivative oscillator drop off in energy. We also saw the PPO, that's our former MACD indicator. We now call it the percent price oscillator as opposed to the moving average convergence divergence indicator. Why? We like the price percent oscillator better because it actually follows percentage changes and not just dollar or cent changes. So it just works better and is more easy to compare across the board. And we see that that steep up movement has also contracted. So we'll continue to watch. That's just what's happening on our 2-day chart on the total market. Still well above the weekly trend line, but that 2-day trend line has been broken. If we get another green candle at some point, we will attempt to redraw that, but we are below that movement now. If we look intraday to see what we see on our 4-hour chart, 4-hour chart has been sliding sideways since it crossed over going down on the 28th in the afternoon, actually started going down on the morning of the 28th, and is still going down. It has not yet crossed over the 2-day trend line as far as where it ended at the end of the day. But we do have the backup occurring, derivative oscillators heating up in its downward momentum, as is the PPO. What are we waiting for? We're going to see if the market indeed will turn back around and move back up through the 4-hour chart. And when it does, when we see a crossover on the PPO, that'll be our chance to jump in and see if we can ride some up action in this market, if there's still any there. That's what we're waiting for. Now let's check out the S&P 500. It was down 0.26% for the day. Looks very similar to the total market as far as moving off of all that prior up movement. Derivative oscillators also lost energy, and the MACD or the PPO has lost some energy also. But again, no crossing over or going down yet. Just has stalled as far as that up movement goes. We look at the 4-hour chart. Looks very similar. Crossed over going down on the 4-hour chart back on the afternoon of the 28th. And again, has really been sliding sideways, so a backup is underway. If a crossover does occur, we would be looking to jump into the S&P 500 via SPY and ride that up and see if, again, we could make some virtual dollars. Remember, we're not a stock calling service. We are an education firm. We want you to practice with us, get really good at reading these charts, then you can make up your own mind. Okay, let's go back to the 2-day chart. Take a look at the Qs. What's the Qs? That's a NASDAQ 100. It had been shooting up through the 30th, and then all of a sudden, I'm sorry, not the 30th, the candle ending on the 28th. What do we see happening for the candle ending on the 30th? We have in the NASDAQ, again, it was down substantially for the day, 1.24%. Our 2-day charts show us on the candlesticks a big doji. That means that over the 2-day period, it opened and closed at about the same area, and we had lots of up movement on the wick and some down movement as shown by our wicks. But what does a doji mean? It means lots and lots of indecision. It means that there may be a sentiment change on the 2-day chart, getting close to crossing over, going down. Remember, our weekly chart is in a confirmed down movement. Are we going to see our 2-day chart parallel that? That would be nice because we're a little schizophrenic right now. We like all of our charts to be moving in the same direction, or at least the two big charts, then a backup on the short chart, and then a good entry point to be able to ride a trend. Well, let's see if indeed over the next few days we have a crossover going down, because we don't have any kind of trade at this point on the NASDAQ 100 or anything we feel real comfortable with. We do have a strong backup occurring on that 4-hour chart, and maybe it will drag the 2-day chart over into a down move to match the weekly down move, but huge down movement in the afternoon. They had started the day off with some down movement, but a great deal. And again, NASDAQ down big time, 1.24%. That's quite a large down movement on this chart, actually approaching the trend line on the weekly chart. So lots of strong down movement in just one day, crashing through the 2-day chart, getting down close to the weekly trend. So we'll continue to watch and just see what indeed is going to happen on the NASDAQ 100. Lastly, we've reviewed now our 3 indexes. Let's take a look at gold, down 1.33% for the day, continuing to be a really nice looking trend line on that 2-day chart. Remember, gold is going down on the weekly and the daily. Now, our real trading chart up until recently has been the 4-hour chart. It was giving us pretty decent moves over time, although it is not really working now. We have warned about that. Why? Because our weekly and our 2-day chart are in down moves. It crossed over going up, which is a problem when you have a small chart trying to make a massive correction for 2 big charts moving strongly down. What happened? It crossed over and then immediately crossed back over going down. There may have been some of you, in fact, as I checked the email, some of you did practice a jumping in point in the afternoon on gold. And again, watch for it in the morning. Want to see how gold opens, and you may be able to do an inverse gold trade. You can practice that in a virtual trade if indeed that sets itself up for you. So those of you who tried to jump in and do a 4-hour trade on gold going up, hopefully when you saw what was happening in the market, you immediately killed that, and maybe some of you entered into a down trade in the afternoon. Remember, which way does the market tend to go? It always tends to go, all things being equal, in the direction of the biggest chart, which is our weekly chart, which is going down in gold. Folks, that's where we ended the day on Wednesday as we go into the new month, the last month of the year, December the 1st, Thursday. We so appreciate you being with us. We love to hear from you here at Charting Wealth. Please go to the website. You can always communicate with us from there. We'd love to have you sign up for our newsletter if you don't already receive it. It's easy. Just put your first name in, your email address. We'll get it out to you along with our How to Read a Stock Chart video, our daily market worksheet we ask you to fill out every day. You will find that will supercharge your training. And, of course, first, listen to our 15-minute How to Read a Stock Chart video. And lastly, we have our layout from freestockcharts.com that we also provide to you. We appreciate you. Hope you appreciate us. You want to do something nice for us? Go to iTunes, subscribe to our channel, to our podcast, give us a 5-star rating. Also, go to YouTube and subscribe. And like we said, sign up for our daily newsletter. We appreciate you so much. Hope you appreciate us. Hope this training is going great for you. God bless. Wish you the best from chartingwealth.com.